Joe Longo, welcome to the program.
Thank you, Ian.
Private equity firms have been around in Australia for a very long period of time now. We've seen massive takeover bids, in fact, for decades. Why the sudden concern now?
Well, it's not sudden. There's been a concern about listings on the Australian Stock Exchange for some time, and indeed stock exchanges globally. Historically, the exit strategy for private equity has been to go public, but these days and in more recent times, that strategy has become less popular, less frequent, and a lot of private entities are staying private. And so the issues we're interested in are, why is that so? Why are the listings declining, not only here but globally? And other related issues to do with the role of superannuation, the growth of our markets, and the interaction between private and public markets. So there are a lot of interesting questions there for us to look at. And most of all, we're interested in making sure that Australia remains a competitive and attractive place to invest.
When we talk about private investment firms, we're talking about two things really too, aren't we? We're talking about private equity firms that invest, but we're also talking about private credit firms as well. Which one do you think carries the greater risk?
Well, the question of risk is something we have an open mind about. In terms of the private markets, there is a wide range of activities that we call private. So there's private debt or credit, private equity, infrastructure investments, property investments. Any investments that are not publicly traded, I think, is the way to think about it. And the discussion paper we published this morning looks at this. But your question sort of raises a much bigger issue about, and that is what's going on here. When we talk about private markets, all we really know at the moment is that they're growing very rapidly in Australia, and we'd like to understand them better.
When you talk about private markets, I mean, what is your biggest concern here? Is it transparency or the lack of transparency that you're worried about?
A couple of things. There's the question we've already been discussing about why are people going to the private markets in preference to the public markets? Is there something going on there that we should better understand? So, for example, it's sometimes said, because the regulation's too burdensome. As a director of a public company, it's just too burdensome from a regulatory perspective, and that's why we like to play in the private market. So we want to understand that. Our preliminary view is it's not because of regulation that people are going to the private market. But in terms of risk and related questions, what we're really worried about there is opacity, that we don't have good visibility into what's going on. We have some, but the data is incomplete.
And why would that be a problem though?
Well, because you don't really know whether a market's functioning or not unless you know what's going on. So we don't know whether we have a problem yet. And as a national markets regulator, we can't play in the dark. If we want to be a well-informed market regulator and be attuned to any emerging risks, we have to know what's going on in the market. Now that doesn't mean, I want to hasten to say, that we say that there are problems in the private market. It's much more subtle than that. It's a system issue.
I remember during the global financial crisis, it was that fear of the unknown, that people didn't know what was out there, and so they withdrew everything. It was called contagion at the time. Is that the kind of thing you're concerned about here?
It's potentially something to be concerned about, but we're not calling that out at the moment. What we're saying is that there's a lot of movement and dynamics between the private and public markets that we need to understand better. Now, if there are emerging risks that could lead to some kind of contagion, then at the moment our understanding of the way these markets work wouldn't give us any early warning about that. So the key to this is transparency, and even Larry Fink, who runs the world's biggest asset manager, has been saying it would be helpful to have better data and analytics in order to promote transparency. So until we have that, we don't really know whether we need any more regulatory interventions. I mean, it's not my intent to increase regulation in the private markets. It is my intent to make sure that they're orderly, efficient, and have high standards of integrity.
You've called for comments, you've got a discussion paper out now. What comes next?
Well, the heavy lifting now starts. We've done a lot of work the last 6 months to produce a discussion paper, lots of questions. We're hoping before the end of the year to publish a report where we will publish some findings about what the result of our consultations have been and the responses to our questions. So my big message to the market, we've asked by the end of April for people to make submissions. We'll be working very intensively with market participants to help us understand these issues. And then we will be publishing, I hope, something a little bit more definitive about our thinking. But I want to just remind everyone that these issues will be with us for a long time. We'll do our best to come up with some findings to advance our understanding, and that'll happen, I hope, before the end of the year.
Joe Longo, thanks for joining the program.
Thank you, Ian.